Welcome, everyone. Today, my guest is Alex Toth, General Manager of Homebuilder Partnerships at Opendoor, to talk about the latest homebuilder sentiment, which was positive, and the advantages builders have in this market. Alex, welcome back to the podcast.
Sarah, thank you so much. Thank you for having me again.
Absolutely. We enjoyed our conversation last time, and we are always interested in checking in on what's going on with builders. So let's first start with builder sentiment for March. Despite the challenges facing the housing market, builder sentiment was cautiously optimistic. That's in quotes there in March. So, what are some of the factors that are giving builders more confidence in this market?
Yeah, absolutely. And I think you're right. Cautiously optimistic is what we're hearing across the board. And just so everyone's on the same page, builder sentiment is based on a monthly survey of NAHB members. And really, it's meant to take the pulse of the single family housing market. So the survey asks respondents to rate market conditions for the sale of new homes currently in the next 6 months, and then what traffic of prospective buyers looks like. So kind of taking a blend of how we're currently seeing the market and then the anticipation for the future market. Now, a number below 50 indicates that most builders view conditions as poor rather than good, and obviously vice versa. If the number's over 50, most builders are seeing that conditions are good. So in March, the score rose 2 points from February, from 42 to 44. So still not quite at that good level, but quite an improvement from the last time we talked in November, when the index was at 33. And additionally, for context, year over year, last March, the index was at 79. And really that was driven by much more significantly lower interest rates. So really, when we look at the three components of the index, the sales conditions rose 2 points to 49. Buyer traffic rose 3 points to 31. So still quite low on the traffic level. And then sales expectations in the next 6 months fell 1 point to 47. And I think a lot of that's driven by some of the uncertainty that we're seeing in the macro environment. But the other bit of good news is that new home sales did pick up by 9.8% from normal levels. And that's really helping some building material companies. And when we look at kind of regionally how this breaks down, we're seeing the South and Northeast seeing some strength, each rising 5 points. The West having a little bit of recovery. Remember when we talked about the West with some of those net in-migration markets, particularly the Phoenixes of the world having really, really strong COVID in-migration. They're picking back up 4 points, and the Midwest kind of remaining slow and steady at 1 point. And really, I think the last thing that we see and that we're touching on is really that current sales conditions in March, rising 2 points to 49, is the strongest traffic reading since September of last year. So we're starting to see a good bit of recovery. And this matches everything, this sentiment report matches everything that we're hearing with our homebuilder partners here at Opendoor. And just kind of a reminder of where our expertise comes from, we work with builders in more than 50 markets across the US for folks to be able to sell us their current home, to go ahead and buy their new construction home, have a contract on their current home, and then purchase that new construction home. So we talk with a lot of sales associates and a lot of builders across the country through that channel.
Yeah, and we appreciate that. That's why we have you on, is because you really do have that, larger look there. What do you think? What are some advantages that builders have compared to sellers in the existing home market? Because I do think that there's probably not the same optimism among sellers of existing homes. So what do you think is working there?
Yeah, it's really kind of two different markets when we look at the new construction market versus the resale market, Sarah. You're absolutely correct. And I think this year may be a year where we see builders grow a significant share in terms of the overall share that they're getting of home sales. Really, I think the key drivers are the builder's ability to offer incentives to customers. So these incentives are coming either in the form of price cuts or rate buydowns. So when we look at kind of how the survey shakes out, we see that 31% of builders reduced home prices in March, about the same level that reduced home prices in February. And again, 62% of these builders are saying that they're also buying down that 30-year mortgage rate. So we're seeing some of these builders buy rates down even into the mid fours, into the low fives, which really, really helps builders sell homes. As we know, most consumers are payment driven. So they're looking at this and saying, well, even though this new construction home might be more expensive, because of this rate buy down, my payment is either going to be the same or even lower than a similar resale home. And obviously, with new construction, you're getting all that new technology, new air filtering, all the health and wellness benefits of a new construction home. So we think that this is really going to be a year when builders can continue to drive share. And just for kind of the audience's reference, Zonda just put out a survey and some reporting. They're a company that deals with a lot of new construction data and new construction surveys. And really, when you look at early 2022, almost kind of the height of the market, in order to get that same payment today, most builders needed to cut their homes by 20%, needed to cut those prices by 20% to get to that same payment. But what we see is that they don't need to take that full 20% payment. We're seeing some 5 to 10% price cuts and then adding in that rate buy down to get to that same payment level. And builders really have that opportunity because they're building these homes. A lot of the public builders obviously have to sell these homes to meet their quarterly guidance. And they're not kind of stuck with that low interest rate like we see a lot of consumers where they're simply saying, hey, my rate's sub 3%. I have no interest in going out and getting a much higher rate regardless of the home. So builders have a lot of advantages versus where we're seeing the resale market kind of at a little bit of a standstill as individuals are hesitant to leave their current mortgage rate to go get a much higher mortgage rate and kind of worry about, am I selling and buying and having this transaction at the wrong time?
That's so huge. It's hard to overstate that advantage that the builders have because your typical seller, they can lower the rate on they can lower the cost of their home, the price, but an individual seller is not in the position to be like, let me do all these things for you, that a builder can. And to your point, you're getting a lot of brand new things with a new home that you're not going to have to replace the water heater or the air conditioner or the roof or whatever. So for a while, so I do think that's a huge advantage.
Yeah, absolutely. And I think the other piece of this is, builders have seen just like the market at large, a really, really, extensive home price appreciation kind of coming out of the pandemic as everyone realized, okay, we are going to be staying at home and folks were able to work remote. And we saw homes be really, really great performing assets. So you saw builders really report some strong earnings throughout, the back half of 2020 and into 2021. And really those earnings came in the form of, very high margins as they were able to sell the homes that they were building, at 2019 levels. All of a sudden they had that price appreciation and were selling that same home for a much higher price. We were talking to builders across the country who, had 30 buyers for every home. They were saying, hey, I'm taking a price increase basically every 3 sales that I have. So while they are cutting prices, they still have really, really healthy margins. So we're seeing a lot of builders whose, margins were in the 30% range. Now we're seeing that kind of come down to the 24 to 22% range, which is much more in line with historical averages. The other thing that we see builders able to do that your typical seller is not is what we call value engineering in the industry. And so I think what we see is builders are basically working with suppliers to change the types of materials that they're using. So they know, if your lot has already been purchased, your labor cost is pretty standard or maybe increasing. You're looking at this home and you're saying, well, where can I maybe keep this price the same or keep it relatively in line, but not impact the overall experience of the home? And that's where they might use different cheaper materials on the flooring or on the windows, but really, doing everything they can to create affordability and bring additional supply to the market. So they have a lot of options to be able to sell homes, work on those affordable price points and help consumers buy that to your point, the resale market simply doesn't have.
This hits very close to home for me because we bought a home in a new area where builders are still building last summer, and now we're trying to sell that home, and it's hard to compete. And one of the things I thought was, in a higher rate environment, when homeowners can afford to pay less. That's exactly what I was thinking about those materials. And I'm sure, there are some of the extras or nice to haves that builders can just cut, right? Like, oh, we can go with this kind of tile instead of this kind of tile. We can go to this kind of flooring, especially comes to mind, and just the finish outs, right? And people might be less picky because they're more price conscious.
Yeah, and I think that's a great point where there's kind of two things we see in that regards to consumer preferences is, I think the kind of overall buoy to the entire market is the fact that we have this massive, massive millennial generation that's in peak household forming years. So while consumers are kind of looking at this and saying, hey, I don't want to move. I want to keep my rate locked in. Everyone who has a growing family probably understands there's simply no option, and they simply have to move forward when are having your third child, or you're adding another pet to the family, and the house is bursting at the seams. And so there's a large portion of people that simply have to buy a new home at this point. And I think they're really appreciative of those cost-effective materials as we're balancing a very, very volatile interest rate environment, right? So I think that's where builders recognize, and the industry at large recognizes, hey, we are anywhere from 2.5 to 5 million units short, depending on what survey and what market observer and economist you look at. We know we need more housing. So in order to do that, the builders do have to make those cost-effective trade-offs. But I'm sure they understand that there's consumers like you that are looking at that and saying, oh man, I bought my house at a little bit higher price point in this same general area. I think that's the overall kind of market push, and where that cautious optimism comes from that we talked about is the fact that this millennial generation and then Gen Z right behind it are in those household forming years and really, really driving demand. So I think if builders are able to bring a unit online and have that unit ready for a family, that's absolutely fantastic. We've been hearing a lot of sentiment from our builders that they are shifting a little bit down market as well into that entry level price point. I think you hear this term a lot, the missing middle. I think that's kind of what we're seeing of builders being able to bring on affordable homes for first-time buyers to get them into that home environment and then start to trade up through new construction. But it's definitely a balance there when it comes down to customer experience. And I follow pretty much every home builder on Twitter, and I see a lot of commentary. And there's definitely a lot of folks who look at this and say, well, hey, you're selling this home for a little bit less than I bought it last year. And that really just comes down to rates and the volatility we're seeing in the market.
Absolutely. And listen, there are no guarantees here. So, when we bought, we knew what we were doing there. So to your point on, they might be looking to serve different kinds of buyers, or at least understand the price points that they're looking at. Do you see like different certain types of lenders being more positive? So for instance, is it a better market for luxury builders, or those who are on the, in that starter home era, or in the missing middle?
Yeah, so what we're seeing is it really depends on geography and availability of inventory. And consumers seem to be really accepting that we're in a new mortgage rate environment, and they're accepting these new rates. Stuart Miller, the chairman of Lennar Homes, one of the largest home builders in the country, their Q1 ended in February. They have a little bit of a different fiscal year, and they're usually the first to report. And really what they were seeing is that the same sentiment, that consumers are accepting these higher interest rates and starting to move. So when we see a resale inventory being as low as it is, we think that there's a really, really great opportunity, again, for that entry level price point and for that first move up price point. We look at this as a company, and we understand that there's people right now that are moving, are really those individuals, like I talked about before, that really have to move. And that's typically as their family is growing, is really kind of that forcing factor to just simply outgrow your home. Where when you maybe look at individuals who are not quite at that family forming stage of life, or the active adult segment of the market, you see a lot of those folks say, hey, you know what, I'm fine. I'm sitting in my home. I have a ton of equity. I can kind of wait and see and maybe make my decision in the next 6 months or in the next 12 months. So it really does seem to be that anecdotally that first time buyer and that move up buyer that's seeing a lot of strength right now, and really just saying, hey, the interest rates are what they are. I'm going to go ahead and make a decision, and over the 7 to 10 years that I'll stay here as the average American family, this is going to be the right decision for me. And we see home builders really leaning into that message. The other thing from a geography standpoint, we continue to definitely see some strength in the Southeast. I was recently visiting Tampa and talking to the VP of sales of one of the largest builders in Tampa, and they were saying that they really did not see a slowdown, and really through January and February had some really great sales numbers. And they're kind of, as a large builder, tends to be right at that median price point in the market. And so they're still seeing a ton of strength as you have net in-migration. And I think, Florida continues to be one of the bright spots overall, where folks are saying, okay, you can kind of, if you have these net in-migration numbers, in addition to the millennial family formation demand, and now you have all these new people moving into a market, you're just going to see the housing industry do well in that market, and builders are recognizing that and taking advantage of that.
I love that. Let's dig down into regions now. I appreciate the Southeast comment there, and Tampa specifically. It's pretty amazing that continues to go strong, since that was one of the biggest movers, right? People were moving there over the last year and a half, especially. What about some of those other markets that we talked about last time? So, what about the Southwest? What about the Phoenix market or the Austin market? Or if we want to start with regions first, that's great. Like, is there a region that is doing the worst right now, like that we can look at?
Yeah, I mean, I think it continues to be a little bit more of the same from what we initially talked about, where the West continues to struggle as folks move to some of those markets like the Phoenix, Austin, Boise markets that kind of are having a pullback now, whereas the South continues to seem to be a very large job creator, despite, and was a job creator prior to COVID. So I think when you look at from a sentiment report standpoint, the West is coming in at a 36 in March, and the Midwest is actually reduced from a 36 in February down to a 35. So those are kind of the markets where folks really are kind of still trying to adjust and trying to understand. But we do see, a few bright spots despite that. We've all heard the news of layoffs. We've all seen that, but employment really remains strong in a lot of markets. It really seems like the layoffs have been concentrated in the tech industry. I think Meta and Amazon both announced layoffs this week or last week. But when you look at Dallas, Jacksonville, Houston, Atlanta, some of these really large markets in the U.S., they're still seeing really strong employment. The other thing that I think we see is that some of these smaller, more local economies where folks maybe are working remote are seeing just kind of an increase in their overall payrolls. Places like Charleston, South Carolina, Boulder, Colorado, Port St. Lucie, which is there on the east coast of Florida. These are areas that are large home building areas and that are really picking up steam despite some of the kind of broader macro concerns that we talk about. So I think the key thing is, the West, I think, is still trying to figure out how the market's going to be impacted if they're going to continue to reduce prices. But the South, the Midwest, and the Northeast are a little bit more stable. And I think what's driving that is not only the net in-migration, but what we talked about before, which is simply the lack of resale inventory. So that's really going to be one of the key drivers. And I think where that cautious optimism comes from, pretty much every builder right now seems to be focused on the macro, trying to understand what's going to happen at tomorrow's Fed meeting, what's going to happen in regards to backstopping some of these banks and Silicon Valley Bank and all the fallout from that. Because I think if we see actually a dip in mortgage rates, that potentially might pick up some of the resale buyers off the sidelines.
It's a great point, and it is the question, right, for our industry is like, what is happening with interest rates? Because that is going to determine so much of what the rest of this year looks like. And so, that's the next question that I wanted to ask you is like the overall outlook for 2023. Last time we talked, it was November, so we had, what we thought was going to happen. Has that overall outlook for builders changed at all?
Yeah, I think for builders, particularly from when we talked in November, absolutely. And again, just going back to the data, this sentiment in November was coming in at 33, dropped to 31 in December, and now we've popped back up to 44. And I think that the key here is that the selling season started a lot earlier. We had a pretty dramatic drop in mortgage rates in January, and that really seemed to pick a lot of folks up off the sideline. And when you look at what NAHB is forecasting, they're seeing that the new home demand really is picking up as consumers are saying, "Hey, I'm accepting these rates." That lack of resale supply continues to be a stressor on the market, and then builders are bringing inventory online, so they're very cautious about how they balance putting new inventory on the market. But in this uncertain environment, we hear anecdotally, I was talking to a VP of sales from a top 20 builder, and he said, "Hey, look, one of our best performing segments right now are our spec homes, our inventory homes." So in the building world, you have, a home that you can go in and build that home, and it maybe takes you 6 to 9 months. And then builders build that home that's ready to transact on today. And those are the homes that consumers are actually gravitating towards in this environment where they say, well, I want to lock in my mortgage rate. I want to know what I have, and I want to just move into that home. And I think that's why we're seeing some of those cost-effective materials actually be acceptable to a consumer, because right now the certainty and the ability to get in the home and know what they're going to pay outweighs waiting 6 months and trying to see what's going to happen with the macro environment. The last thing that we see is builders are really continuing to use those incentives. So those margins still are going to be at that normalized, 20 to 24% levels, and builders are completely okay with that to move inventory. And we're even starting to see some builders buying land again, which is always a sign of optimism from the home builders.
That is a sign of optimism. You talked about layoffs and the labor market in regards to just the overall economy, but let's talk about the construction labor market for a minute, because this is a huge driver too of some of the things that the Fed is going to be looking for as far as job losses. So what do we expect to see in construction labor in the next 6 months, given that home builders are starting to buy land, that they're feeling a little bit better? What do we expect to see there?
Yeah, and this is not something that we watch as closely on our end, but really, I think what we see is that as some of these material prices start to come down, as land prices start to come down, builders really are leaning in and saying, "Okay, I can start to get some inventory and start to move forward with a lot of these housing starts." And I think we talked about this a little bit last time, where as some of these regions really do have quite different levels of performance from the west to the south, that we hope that we can see that labor transfer to some of these centers where building really is picking up. So I think hopefully that the construction market, the construction labor supply has traditionally been a very undersupplied labor market, and so we hope to see that continue to be strong. I think there's a few factors in addition to consumer demand that's going to help that labor supply, which is trends where we really see a lot of institutional investors leaning in and purchasing new construction homes, as well as builders pivoting and having build to rent inventory. So this is where they're building homes and renting those homes out. And a lot of the top 10 builders have these arms where they're saying, well, we simply need to bring more supply onto the market in any form. And so regardless of if that home is being built for a sale to a consumer, or it's being built to be a rental home, that's still supply, and that's still supply that's needed to be built by a large construction labor force. So I think we probably will continue to see a very strong demand for construction roles in the next 6 months, regardless of what happens in the macro economy. But that's, again, we're focused at Opendoor really on the transaction and the buy and sell. So that's really kind of taking a lot of projections from various trade publications out there and kind of understanding how that all plays together.
It makes total sense. And, we do see every time we see the construction labor numbers broken out, I mean, most of that is for multifamily, right? It's not so much single family. So interesting times. A little bit off topic, but I wanted to talk about the International Builders Show in February. And, what were some of the innovative products or services showcased there?
Well, Sarah, much like everything in our lives, AI was the key buzzword of the International Builder Show. So I think we're seeing the building industry actually being front-footed here versus maybe some of the years past when we saw the GFC and builders kind of take a pretty hard pause from building for a few years. There was kind of a lag in adopting new technologies. And so what we're seeing right now is really builders leaning into what we see at Opendoor as well, which is consumers' expectation of a digital self-service and on-demand experience. So customers want to shop however they want to shop, whether that's online, showing up to a model, texting in. And we're seeing a lot of builders and a lot of new technologies really having kind of that AI assistance and that AI texting so that if a customer is looking at a home at midnight, they don't have to have online, they don't have to have a representative ready there for them. They can simply text with this AI chatbot and get all the information that they need. And it's some really, really amazing technology. And I think it's really going to help the industry just simply sell more homes. If you think about another thing that, your typical consumer seller probably is not putting an AI chatbot when they're listing their home. The other big thing is self-showing and with that digital checkouts. So I think really it's kind of trying to piece together all of these digital experiences. We know that customers are finding their home online. That's really where they're being introduced to the brand, and builders are really, really leaning into that. So there's technologies to allow customers to show up after hours and tour those homes. And then there's technologies that if you were looking at a home online, Taylor Morrison actually does a really great job with this as one example. You're able to basically say, hey, I want to put my deposit down and check out this home, for lack of a better term, and basically go into contract on that home. And then the last thing really in regards to customer experience, I think we see all of us being very spoiled in the way that we interact with brands, where transacting on most things these days is very easy. And when it comes to buying real estate, it's still a pretty difficult process. And that's one of our core theses at Opendoor, is really simplifying that process. And so we see a lot of technologies out there to basically help the consumer when they go into contract to build their home, basically be able to follow along on a dashboard every single step of the way and have a really great experience. So builders are understanding, hey, it's not just delivering a really great home, it's also making sure that the transaction and the experience of that transaction with the builder and with the brand is really positive. So some pretty exciting stuff coming out of the builder show, and I think things that are going to be pretty commonplace here in the next 2 to 3 years.
Really interesting to see how they're doing that tracking technology so that people can see all along the way. Because I mean, as opposed to the mortgage process, which can be sort of, not much fun. Building a house is supposed to be more fun. I think so. And so, really enhancing that and having that tech part of it, which every time I've built a home has not been that way. So that'll be interesting to see. And also, the AI aspect. I've definitely seen a lot of homes that are, advertising the smart home functions of that home, which have been around for a while, but it is something that you have over, say, your typical existing home, unless that buyer has put something into it.
Yeah, and I was about to ask if, on your home last year, or when you bought it, I think you said you bought it last year, or if you had one of those dashboards or had any of those technologies. So it seems like maybe not, and maybe those are things that future consumers will get to enjoy.
Yeah, I did not. We had a pretty small builder doing it. I'm He's a great builder. I just don't know if that's, something that the larger brands are doing. Every time I've bought a home, the mortgage process I've gone through and all of that has been some of the most archaic. It's so funny. When I go, I know we can do better than this. It was a great building process, but it would have been even more fun to be able to follow along. And I would think that, the efficiencies that the builder gets from that, just like in the mortgage process, if you provide a seamless experience, then you get less calls. People are self-serving and they're able to, really find out the information without tying up your personnel.
Yeah, absolutely. No, all the builders we talk to, it's kind of, I think, that same sentiment that it's really not replacing their sales team. It's making their sales team so much more efficient, and able to do a lot more and able to sell kind of in these different hours that they typically wouldn't sell in. Which again, I think, kind of in summary, it's all these technologies and the ability to buy down mortgages and the ability to offer incentives. It's looking like that cautious optimism for home builders might be understandable. But again, we have a lot coming up in 2023. And I think we're all kind of waiting to see how some of these larger macro events shake out.
We are indeed. Well, Alex, thank you so much for joining me today and really walking us through a lot of what's happening at the builder level. We so appreciate it. And I know that our audience really appreciates that insight. So thank you.
Thank you so much, Sarah. It was great to be back.